Stop counting the days lost in the rhythm.
Let's take a look at what's happening in the US and global markets today. Oil prices have been dropping significantly, and there are signs that the economy is cooling down. As a result, Treasury yields have reached their lowest point in 2 months. Despite this, Wall Street stock indexes have remained stable, although individual stocks like Walmart, Cisco, and Alibaba have experienced notable declines. On Friday, U.S. 2-year Treasury yields fell below 4.80%, the first time since September 1st. Additionally, 10-year yields dropped below 4.40%, reaching September lows as well. While U.S. crude oil prices have slightly rebounded on Friday, they have experienced a significant decline this week, hitting 4-month lows. This drop can be attributed to rising U.S. inventories and lower global demand levels, which J.P. Morgan estimates to be running at half of their November forecasts. Over the past 6 weeks, crude oil prices have fallen by almost 25%, with the U.S. gradually lifting oil sanctions on Venezuela contributing to this decline. The demand for oil in the U.S. has also weakened. There have been signs of a loosening labor market, with jobless claims unexpectedly rising. Other reports have shown a sharp decline in homebuilder sentiment and a significant retreat in manufacturing in October. However, there was some positive news on Thursday. The Philadelphia Federal Reserve reported better than expected mid-Atlantic business optimism. The overall effect of these developments is a newfound optimism regarding disinflation. This is expected to dissuade the Federal Reserve from raising interest rates again and may even lead to a decrease of up to 100 basis points next year, according to futures markets. The Labor Department reported that import prices fell by 0.8% in October, the largest decline in 7 months. This decline was driven by a broad decrease in the costs of goods, resulting in an annual deflation of import prices of up to 2.0%. Despite Walmart's stock falling by almost 8% on Thursday, the company's overall performance should please the Federal Reserve. Walmart reported that consumers are becoming more cautious and seeking big discounts, especially in food. This aligns with the current trend of consumers being more selective in their purchases. As a result, the S&P 500 index saw a small gain on Thursday, and stock futures were up again on Friday. The VIX index, which measures market volatility, also decreased. Although the drop in U.S. Treasury yields has negatively impacted the dollar, this decline in borrowing rates has been mirrored across Europe and Japan. In the UK, retail sales volumes unexpectedly fell in October as consumers faced financial constraints. Italian yields and bond spreads also fell, despite investors awaiting a review of Italy's sovereign credit ratings. Analysts do not anticipate Italy's debt being downgraded to junk status. Chinese stocks underperformed, with Alibaba's Hong Kong shares falling by 10% on Friday. This drop was a result of the company canceling its plans to spin off its cloud business due to uncertainties caused by U.S. restrictions on exports of semiconductors used in artificial intelligence applications. This decline wiped about $20 billion off Alibaba's market value. Looking ahead, the day is relatively quiet in terms of economic events. However, market participants will be paying attention to speeches from key central bank officials. Additionally, housing starts numbers for October will be released, and there will be an update on the Atlanta Fed's real-time GDP estimate. That's all for today's market update.